In the first 2 months of 2024, the Nigerian Exchange claimed the top spot as the best performing exchange in Africa, delivering a remarkable 33.70% return on investment. These achievements surpasses other notable African exchanges, including the Johannesburg Stock Exchange, Egyptian Exchange Index, and the Ghana Stock Exchange. The NGX's exceptional performance was previously highlighted in January when it emerged as the world's best performing stock market in the initial 3 weeks of the year, outpacing global competitors. Despite domestic challenges such as insecurity, inflation, and foreign exchange instability, the bourse demonstrated resilience, with the market capitalization growing by 13.79 trillion naira between January and February. To talk more about this, I have Muktar Mohammed, CEO Asheer Dynamic Investment. Thank you so much for joining us on the show.
Thank you, Lekan.
So, what's your take that the Nigerian Exchange managed to outperform other top African exchanges with a 33.70% return on investments just in about 2 weeks of the new year, 2024?
I like the way you put it, the manage, because I'm sure you're using that because of the economic situation, the macroeconomic issues, and why is one of the best performing exchange in Africa. And especially when you look at the policies, macroeconomic headwind, you begin to realize. But I always tell people that the market has a life of its own. It starts with that life. Then maybe sometime it needs the economy to continue living, breathing more of those lives. So what happened was that some of the policies that were implemented by President Tinubu were very favorable to the market, especially equity listed in the market. With the removal of fuel subsidy bid was working for those in the petroleum sector and the oil and gas sector that are listed in the market. And when you look at the revaluation or the floating of the naira, it has a very positive impact on the financial sector, even though it has a negative impact on the conglomerate and the manufacturing sector. So those two policies have driven the market to where it is today. And if you look at the sectorial performance, you realize that the banking space and the petroleum and the petroleum sector were the best performing because of these two major policies. And so that is why the exchange has performed very well, because those policy were actually very positive to the market.
So a newly listed equity like Transcorp Power with its parent company Transcorp and FBN Holdings were the major drivers of the 194 billion naira gain in the market capitalization. But then what do you make of these new entrants?
Well, it's good for the market. Transcorp Power is good for the market. It has been there since. It's not that it's a new stock, but it was under Transcorp PLC, and like the management of Transcorp Power said that they were not seeing people were not seeing value in the powers listed along with Transcorp PLC, so they have to separate it, and you could see those value coming up. So it's a good thing for the market. So finally, the power sectors are beginning to play the market. We now have two listed power sector companies. We have Geregu, and also we now have Transcorp Holdings. So, and if you look at Geregu's trading for about 1,000 naira, then Transcorp Holding is the next cheapest stock that investors want to get, the price that they are trading at the moment. So for me, it's a very good thing to the market. And like you said, it has added a little bit of incentive to the market. And again, you must know that in the near future, power is going to play a very important role in the economic prosperity of this nation. And so it's good to have some of those sectors or some of those companies that will be the driver of economic growth listed in the Nigerian Stock Exchange, because it calls for openness and transparency, and that also will attract foreign investors to the market. For MBN Holding and First Bank Holding, I think what we are seeing there is largely driven by emotional sentiment, especially for those, especially in the fight to have control of FBN Holding. Remember, that fight is still ongoing between Femi Otodola and Oba Otudeko. So I think that is what is really driving that stock at the moment. Before now, we were told that Femi Otodola was the largest shareholder, was made the chairman, and before we know it, Oba Otudeko has more share than Femi Otodola. So there seems not to be any strong fundamental there, because when you look at where it's selling via its result, and then with other companies that are behind them, then you realize that other companies behind them, like Access are now becoming very cheap stocks because again, FBN Holding is still grumbling to pay the dividend that they declared last year because of cut injection. So for me, I'm not so excited about IBM, but I'm excited about Transcorp Power. Again, my excitement is driven because of the openness that we'll see and the role that sector will play in the larger economic in the near future.
Okay, so the gist is about the Nigerian stock market being the best performing exchange in Africa. A lot of people have praised its resilience and all, but then does the market capitalization of listed equities, does it reflect the overall economic health of the country?
Well, that's a big one. Like I said, sometimes the market has a life of its own that is different from the economy. Then at a point, then he needs the economy life to be able to sustain. And then when you look at it, you ask yourself how many of the big players that really move the economic are listed there. In the energy sector, the oil and gas sector, which seems to be the lifewire of the Nigerian economy. And the company that is driving that sector now is NNPC PLC. They are not listed, NNPC Nigeria Limited, they are not listed in the exchange. So you don't seem to see those correlation. That is one. And then secondly, the petroleum marketing company, in exception from Surplus, all other petroleum companies just listed their marketing arm in the company in the exchange. So you could not begin to look at it. Okay, if the companies are doing badly, it will reflect on the result of the exchange. You cannot use it to judge the larger market. It's not there. Like I said, those are the two drivers in the financial sector. If you look at another sector, you look at the communication sector, you realize that most of them are listed there. That's why we are able to get informations and they are able to keep up to corporate governance. If you look at the financial sector, also, mostly bigger players are listed there. So when you look at that compared to what you see, you realize that what we are seeing now is investor perception of equity because they believe that some of these equity are undervalued. So they begin to take position in anticipation, near term and future. So that's what Nigerians are investing on, especially in a down economic like this. Anytime the economy is down, then assets are cheap. And if you're able to acquire assets that are cheap at the time the economy is down, you'll be the one to gain from it when the economy starts going up. I think those are part of the things that the most Nigerians are looking at. But the fundamentals of those companies are still strong. Like I said, they have a life of their own. But for them to sustain that fundamental, the economic life must also be integrated into them. And when that happens, you see them making good profit that you will be able to relate. Because now sometimes when they declare this profit, a lot of people are not able to relate with it because they feel that in a bad economy as bad as this, how do they make so much profit? But again, I always say, in the bad economy, there's more opportunity in the bad economy than in a very good economy.
So what are the opportunities that are there? Because if you say that there's got to be some sort of economic input to sustain the trend, what are those areas you feel that we should be looking at, most especially as we still keep hearing stories about potential risks that might actually derail this trajectory? What do you think those factors should be, or will be rather?
Number one, we need to get our exchange rate stable, and that's it. We need to get exchange rate stable. Once the exchange rate is stable, I can tell you we attract a lot of foreign investors. That could be the game changer. The exchange rate must be stable to the government and say they attracted inflow about $1.44 billion as of February. So it's beginning to trickle in little by little. The exchange rate needs to stabilize for us to see the kind of movement that we want to see and then relate it via the economy. The other one, again, like when people will now say, okay, you know what, it's not a true reflection. Like I said, when the opportunity that I find now is there, that it has to do with the cheap nature of those companies. Because if you look at all those Nigerian companies, you can say now that the company that have the highest value in terms of price movement is Seplat, and also now Geregu. When you compare those Seplat is not even up to $1. Geregu is selling above $1 plus. So when you look at that together, Seplat is above $1. Geregu is just selling above $1. So because if you look at the sale 1,500, Geregu is not even up to $1. So sometimes those are the perceptions some investors look at and say, look, we got to go in here because we believe that there's a lot of value there.
All right, so what about global shocks, global uncertainties, the fluctuation in global market? Do you think in any way it could have an effect on the Nigerian stock or probably the country's economic environment? Because some people have said that that actually in a way influenced what we recorded in the first quarter of 2024. So what do you think?
I think it will because the economy has become a global village. First quarter, we expect GTCO and First Bank to may have a dip, not because they are not performing well, but because of the issues they have with the Ghanaian government. You could see that place. So why I'm bringing that is that the economy of the world has become a global economy, whereby what affects one will affect the second. Because if it's not directly affecting them, it may be affecting their lender. It could also be affecting one or two people that do business with them, the credit line. So definitely you see that happen if the economies begin to take those issues. But I basically think that the world has become a global village. When one thing happened to one, then it somehow has a trickle-over effect to all other economy, if not nick on the buff on time.
Okay, let me just quickly ask you this before I let you go. We'll look at the macroeconomic factors that came into play. How would you describe it, and how do you think the response of the investors has been so far in ensuring a bit of stability, looking at the challenges? So how do you think that investors would be responding to this, looking at the Nigerian equities?
Lekan, you saw that the investors are responding to it, and the way they are responding is different from what people thought. They are now moving from the equity market into the fixed income space. So they've made so much in the equity market, they are moving into the fixed income space that have relatively peace in terms of exchange. They said the returns there is about 23% comparable to the market that you have to make sure that you are strategic in your positioning before you can enjoy a good percentage in terms of return. So most investors are now exiting the equity market, going to the fixed income space. But even with that, some of them are going to those fixed income space just to make sure that when the profit is right to come into the equity market, they will also be there. So those are some of the things that are really happening there. That's the effect of some of the policy by the Central Bank of Nigeria has made more investors goes into the fixed income space than the equity market. And that's why you saw the drop back the equity market have suffered over the week, because there's a lot of fund that is leaving that space into the fixed income space.
Okay. Well, I guess that's something we'll still continue to monitor during the course of the week and months to see if that resilience and strength can be sustained, as you earlier mentioned. Muktar Mohammed, CEO of Asheer Dynamics Investment. Thank you so much for your time.
Thank you for having me, Lekan. Thank you.